Hi, this is Mike Rankin with Relational Spotlight, and today we're going to talk to Dan Reilly, who is the managing partner, or maybe one of them, with Measured Capital. Dan, welcome.
Thanks for having me, Mike.
Yeah, absolutely.
Excited.
Yeah, good to see you again.
You too.
So share with us a little bit about Measured Capital, and if before you do that, maybe a little background on your career and how you got into it.
Okay. I can share a vulnerable story that will get us right to today.
Okay.
So
do I need a tissue, or are we okay?
Nah, just
not
for
that
me.
vulnerable.
Just for me. Yeah.
Okay. All right.
So 3-ish years ago, I'm on the front porch of my patio with my wife. Friday afternoon, sunny outside. Kids are playing on the yard. Actually, right around the corner here is the house, and typical Friday at this point in my life, we would have a glass of wine, we'd sit on the porch, and I would complain about how bad my business is and my business life is. I got legal problems, I got employee problems, my partner's not working out. I haven't hit my sales number. I was running the sales revenue generation aspect, so I was never enough, right?
Yeah,
it was never good enough.
of course. Yeah, what have you done for me lately?
You got it. No matter how good the number was, it was never good enough.
Yeah.
So with a lot of love and respect, she, I'll paraphrase, basically said, congratulations on building a profitable company. I think you're miserable.
Right.
And I don't really like this anymore.
Yep.
So you have total freedom to just get rid of it.
Right.
And I'm
That's
like,
awesome.
It's worth a couple $1 million. This is
Right.
my whole life. What are you talking? Just get rid of it.
Yep.
Because I don't like it anymore.
Right.
So that was the hard moment, right?
And I love you, but I don't love you in this condition.
Correct.
Right. Yeah.
Yeah.
Right.
This is not good for our family. You're not
Yep.
serving your role as a
Yep.
dad. So then it came down to, okay, hard conversations. And then that corresponded with feedback from 2 mentors who had been beating me for 2 years. Like, hey, dude, I just don't think this is what you were meant to do with your life.
Right.
You're hanging on too tight. So the other story going on the whole time was that as I was building the business, it was a technology sales business. Every time I have enough capital, I'd go buy a single family rental home. And that built some nice passive income and another business. And the joke is that every time I talked about real estate, you'll see it right now, I get excited.
Yeah, right. Your face lit up. Yeah.
Hey, right? And so I had this portfolio. It was working out well. I had a good team. I loved it. So the push was, could you be brave enough to make this your full-time deal? Could you actually transition to full-time real estate investor? So that was story one. That's the hallmark of how we got here. And then the second one is then Greg, my partner, the other half of Measured Capital. He was a friend of mine during this transition. I was selling the company and getting out of this, and that was a pretty challenging process, obviously. Right. And I told him
a sticky exit.
Very sticky exit. Personalized, all that stuff. So, and I was looking to deploy the capital that was going to be generated into a triplex in Costa Mesa. That made sense as a natural shift up, right, to go to a larger asset. And Greg, I'll never forget the conversation. He goes, Dan, that's awesome. Congratulations. Your family's going to be stoked on that. You know what I would do if I was in your position? I'd go to Texas, I'd lock up a 100-unit deal, and I'd figure it out. And I go, what did you just say?
Right.
And then he went for 15 minutes about like
mind blown.
Right. I'm going to fly there. I'm going to meet this guy. I'm going to do this. I'm going to make this offer. And all of a sudden, I'm like, that actually seems like it could work. Read a couple of books, listened to a couple podcasts. A week later, I called him back and I'm like, we're going to do that.
Right.
Like that. Exactly that. So that's what we did.
Congratulations. Yeah.
I'll tell you more about it from that point, but that is the genesis.
Yeah. Well, I can certainly empathize with you on that changing of the career. I had a similar situation about 3.5 years ago, and those are difficult transitions to navigate, especially when you've got a family you're responsible for and all of that, and but it's much better to be on the other side of it. So congratulations.
Thank you. Yeah.
So with Measured Capital, then tell me about kind of the portfolio now from that first deal that you did. How has it evolved, and what are you guys doing now?
Yep. So we started on a small project in Riverside, 17 unit. Learned how to buy a deal, learned how to get into the mix of the operations, and learned that small deals in tenant advocacy states are not a great business model for me.
Right, exactly.
So quickly we were right back to that 100 unit in Texas, and that's exactly what we found, a 96 unit in Waco, Texas, partnered with a group there, and were able to purchase that, and within 3 months realized this is the business model that works.
Yep.
I like what I'm seeing here. I can control this. I'm leading the team. I'm seeing the numbers. All of this makes sense. And Greg and I were just having fun, like just straight up having fun. So what happens, we left one of our property management calls, went out and had a strategy meeting and said, what can we do? We say, we think we can raise this much money, and we think we can, buy something in this category. So we just set hardcore. We're going to buy 100 units in Des Moines, Iowa, or Jacksonville, Florida, and I'm not stopping until that happens. Took 6 months, many plane flights, a lot of offers, a lot of video offers, a lot of turn downs, a lot of banks saying no way. Eventually, December 2022, we landed our first project, 108 units. That turned to 216, made friends with the seller. We've been off and running ever since.
Awesome.
Yeah.
Hey, when you mentioned Des Moines, it reminds me, we do a lot of work with an insurance company that's based in Des Moines. We like them very much. They're a great company. But I was invited to go back for a golf tournament back there, and so I told my wife Shelley, I said, well, I've got good news and bad news. The good news is we've got an all expenses paid trip. The bad news is to Des Moines in whatever it was, May, and like the tornadoes came through and like ripped up the golf tents. It was kind of nuts. But anyway, that's whenever somebody says Des Moines, that's my immediate
you can't be
reaction.
knocking on Des Moines like that.
No, great company, great people. But anyway, okay. So what's interesting I find about Texas though is it seems to me that it's such a great environment in so many ways, but the asset prices have gone up so much that also the property tax escalation and also just even insurance. So, I mean, when you're building out a pro forma over a 5 or a 7, 10-year period, I don't know how long your holds are usually. I mean, how do you factor in that kind of, volatility or potential volatility?
Yeah, 5 to 7, 10 are the proper timelines. We like to underwrite everything to at least a 10-year hold and be comfortable. If we have to own this asset for 10 years, we're liking to do so. In today's environment, I think the most important part is that it's taken the discipline of that underwriting, making a deal work, and just forced it into extreme categories, right? So I can answer the question and say, if the phrase that we say every single day is, if you can make a deal work today, you're going to be really happy about it in 3 to 5 to 7 years. When interest rates, I have no prediction when they're going to go down, but they're going to go down eventually.
Right.
We're in the hardest insurance market of 100 years.
Yes,
it will soften. How much, I don't know. So rents are a little pressured right now. It will open up again. So my point is, if we can get good assets that work and make money today, when those loosened
factors,
environments come open, then it really works. So insurance is a great example. Like, we were underwriting $500 a door in Florida 2 years ago. We now underwrite $2,000 per door.
Isn't that amazing?
That knocks off millions of dollars of valuation to the seller's property.
Right.
And from my standpoint, sorry, seller.
Right.
That's
well, there's opportunity now. It's just if you're holding the asset trying to sell it, it makes it tough. But if you're in buying mode, and I would have to imagine also with other owners that may have floating rate and they're getting killed and they need to get out of the deal.
Correct. A lot of that distress is coming. We're also learning there's a lot of, I just spent a week at a multifamily conference, a lot of dry powder ready to pounce on those opportunities.
Right.
So there's a lot of feeling there's never going to be a huge bloodbath because every cut,
As
someone's going to take a Band-Aid and grab
exactly.
it. And we've done that on 3 deals. Old owners, buyers fell out of contract, $18 million strike base became $16 million strike price, right? Became better debt, became, and all of a sudden this is an amazing deal. When you put it out in the market, it was awful at that price. Right. But now, because the market beats you up, now it makes a lot of sense. So I was able to secure something that works.
And how do you compete with, it's a saturated buyer's market, even with all the distress factors, right? I mean, you've got private equity in there, you got Blackstone in there. So how do you guys kind of like get the needle in the haystack?
We have figured out our core competency, and the core competitive advantage we have is hyper focus on the buy box that we've established. So a lot of real estate sponsors, I buy apartments in the Sun Belt. Okay. That's a pretty broad. Okay.
Right.
I buy 50 to 200 unit B-class garden style communities built in 1990s or above in Jacksonville, Florida, and Des Moines, Iowa. If it doesn't fit that box, don't ask me about it. Don't talk to me about it.
Right.
If it is in that box, I don't care what the story is. I do want to hear about it, and I'm going to make you an offer that makes commercial sense to me.
Right.
If it's half the guy's target number, okay, that's nice. You don't have to show it to him, but I'm going to give it to the broker and tell him I'd buy that at this price. We've done that for 50 some odd assets over the last couple of months.
And what is garden style?
Garden style is the idea of multiple different buildings holding maybe 4 or 8 units per, right? So kind of a garden, multiple, maybe a lake in the middle, a pool. Florida is full of garden style apartments.
Right.
Less
We got
so
to
in
have somewhere
California,
to drain the water, probably.
That too, exactly.
The alligators need a home.
Exactly.
Got it.
So that I think the hyper focus is huge, and then the other piece is that you have to be able to move nimbly with capital, right? At the end of the day, 60% of a deal is going to be financed by the bank. They're always your best investor, right? Biggest investor. But then 30 to 40%'s got to come from at-risk equity that's willing to roll for 5 to 10 years.
Yep.
We've been able to hit a niche there, especially locally,
Sure.
with business owners and high net wealth individuals.
And you guys are raising a new fund now, is that right?
We are,
Yeah.
exactly.
Okay.
And
so tell me about that.
I will. And we're doing project level, right? So
Yep.
I'll get to that. But the idea is that high net wealth individuals and high income individuals, they know they want yield. They know they want to be in real estate. And the smartest of them know that I'm not going to do this. I'm not going to go figure this out. So I got to partner with someone.
Right, unless they're already in the business.
And then go for it, right?
Right.
Absolutely, right. But if you own an e-commerce company and you make lots of cash, but I don't have time to figure that out. So we've done a really nice job designing deals for that avatar, right? A lot of sponsors syndicate a deal and they do what they want to do and they just say, deal with it, investors.
Right.
We talk to investors and say, what are you looking for? What time frame? What profile? And then we go search for that to inform our buy box.
Yep.
So those are two how we're able to secure deals when BlackRock might be around fishing and they'd still pick us.
Yep. Got it. Okay.
That and BlackRock buys $100 million buildings and we buy $20 million buildings.
Right.
So that helps too.
Yeah, there's a little niche there that the crumbs fall off the BlackRock table.
Exactly.
Yeah, got it. Okay.
And then you asked about, sorry, there was another.
Just the fund you're raising now.
Okay, yes. We have decided to do property level funds. So rather than, hey, I'm going to do a big open-ended for 5 years and raise as such, we've identified at least one property to then fund that.
Got
so
it.
the investors know exactly what they're buying.
Yep.
Because of the
And that's a GPLP
exactly
arrangement?
GP. So and we do 80-20 straight split, profit share from day one, and ensure all capital gets returned to the investor. We are looking at it more of an open-ended fund, strictly for the ability to act quickly, right? Because this is a competitive capital game. So until we have a point where we can't move based on it, then we'll move to the fund. So far, we haven't. We've had enough partnerships to not lose a deal based on that.
Right.
Yeah.
Got it. Okay, great, love it. And so then coming back full circle, how are Friday afternoons now?
They're so good.
Yeah.
Like they're really good. I'm coaching football, flag football on Friday afternoons. Wouldn't have been able to do that before.
Love it.
Pick the kids up from school a lot. I'm really enjoying life. And I think what's worked is that this business can be project sprints is what we call them, right? So I get a deal like right now we're 19 days away from closing our first deal in Jacksonville.
Yep.
I'm busy.
Yes.
Right? February 21st, we're going to Hawaii. We're going for a week. And it's like, we're done. Like we raised the money, we bought the building. We'll come back and deal with it next week. Right. So we're really enjoying that. Whereas the IT business,
you're 24/7 almost.
every day, all day. Inventory got less valuable every day.
Yes.
You had to sell it. You had to collect it. Right. Whereas real estate's like, let it sit for a week, see what happens.
Right.
And sometimes that's the best thing.
Yeah. So there's a little more space and time in there.
Massively.
And then when we met last, I think you were telling me a story about maybe that you make your kids breakfast once a week or something.
It's a meal. It's a dinner. Yeah.
Oh, a dinner.
I'm
all right.
a foodie in terms of I enjoy the science of cooking.
Yeah.
And one of the things that I wasn't doing was cooking.
Yeah.
And having family meals. So I remember it was like a full week. This was back in heavy entrepreneur, not happy Dan days.
Right.
5 days went by. We didn't talk to each other at the dinner table. Kids got a fast food or a pickup, and then I'm eating later. And I was just like, no. We're going to eat the same food at 5:30, and we're going to have a conversation as a family.
That's
and
right.
I just said, if I cook once a week, that'll start to happen.
Yes.
It now has created the momentum, and it's a standard thing now.
Yeah. And how old are your kids?
11 and 8.
Okay. So ours are 24, 22, and 19. And I would say now, as they're young adults looking back, literally some of the greatest moments and just belly laugh times that we had were around the dinner table.
There you go.
And it is a certain type of magic, I mean, we were born, bred, and raised over the last millions of years of eating together, and so I think getting back to that in the community is just so valuable and so important.
It was a key of what we were doing with this whole move, and I'm really happy that that's what my evenings look like. Yeah.
And so if somebody wants to find you online,
measuredcapital.com, and also LinkedIn, just Dan Reilly.
Yep.
The other thing I'll say is I do publish a monthly newsletter called Ventured Learning. Started that out of just like my heavily coached, heavily insightful to myself. And every time I learn something from a mentor, like if I write it down and I teach other people, then operationalizes in my life.
Right.
So I started doing once a month, sending out to some friends. That's grown to a couple hundred people now.
Will you put me on that?
I will. And
me
if
on
you go to
that.
LinkedIn
Yeah.
and you find me, and now there's a link. I finally was smart enough to
Okay.
enable people to sign up.
Yes, right.
So if you go to Dan Reilly on LinkedIn,
Right.
you'll find the link.
Right.
And
so I asked you to do something, then you
Yes.
turned it around and delegated
told
it
you.
back to me.
I'll
you
send you the
son of a
link,
gun.
buddy.
Yeah. Well,
You're a
Dan,
go-getter.
thank you for your time. Really
Thanks,
appreciate
Mike.
it. Yeah,
Appreciate it,
great
man.
to talk to you.